Did y'all see something come up saying recording was
Yes.
started?
Yep.
Okay, cool.
Recording and transcription started.
Okay, thank you.
Alrighty. I'll go ahead. Sorry about that. My name is Chelsea. I'm the association broker. I work for Alliant Insurance. Alliant's top 5 broker in North America, so we have access to all of the markets that are currently writing property coverage for condos in Texas. Condos in Texas are a little bit harder to place, very different than multifamily apartments or commercial buildings in the sense that there's someone occupying the property almost all the time, 24/7. So the risk of a loss, a water loss, fire system loss, or an actual fire are a lot greater than you might see in a rental community that has on-site maintenance all the time, or in a commercial building where a lot of times smaller losses are handled in-house. So with that being said, we did go out to market this year and we had a good favorable renewal. We finished the renewal not very long ago, and we came in with just about $12,000, almost $13,000 in property insurance savings. So the market that we're seeing right now is it has softened, and accounts like the Vine that do not have a lot of losses on record continue to be profitable for the insurance companies, which in turn allows us to find some savings, hopefully in the next year as well. So we're going to ride the soft market, and as long as we can. We did make one small change to the carrier coverage and just moved everything to Third Coast this year, so it was a single carrier, and I think that's where the association was able to find some savings. So happy about that. The valuation, the total insured value of the condo is in par with what we're seeing with industry standards. We did run a report this year to make sure that the values that we were working with the insurance companies on were accurate. So what I'm going to dive into today is the actual deductibles on the master policy and make some suggestions on what homeowners should carry individually. This is going to help make sure that there's no gap in between where the homeowner's insurance ends and the association's begins, or vice versa. So this letter, can everyone see my screen? Anyone?
Yes.
Yes.
Awesome. So this is the insurance FAQ. We had one last year, and then we updated it, and I emailed it to Smokey. He'll distribute that to all of the owners tomorrow, if you'd like. And this letter is intended to be given to personal agents. So it talks right here in the very beginning of the various types of insurance coverage the association carries. Property is always going to be the largest expense right here, because that's what's actually covering the asset should anything happen to it, whether there be a fire or a car driving into a building, anything that exceeds the deductible and the association is going to be responsible for. That's going to be included in that property policy. Equipment breakdown is also property. It's just a specific peril. It has to do with when there's a power surge and there's power going back in the building. So in Texas, we've seen equipment breakdown in condominium associations recently for 2 different reasons. When we had the windstorms and there was gushes of wind and lots of power outages, sometimes when the energy company is restoring the power, that can cause a surge. And if not protected, grounded, or on some type of surge protector, the equipment can result in a loss or damage. So equipment breakdown is within the property policy, and that's going to be directly from something that causes an electrical issue with any of the equipment. General liability, second largest policy next to directors and officers and property, is going to help protect the association from any type of lawsuits, bodily injury, anything like that. It's going to help cover that. It's a very general policy, does provide the coverage to keep the association, in compliance with their documents, as well as Texas Uniform Condominium Act. Non-owned auto, crime and fidelity. Non-owned auto is going to be for a board member or a manager that's performing business on behalf of the association, and an accident may occur and their personal insurance runs out. This is going to come in on top of that. So it's kind of like an umbrella policy. Crime and fidelity is really important, especially right now with lending, all of the lending changes that we're seeing with Fannie Mae and Freddie Mac. Crime and fidelity is going to help protect the association's funds. So the amount of money that the association may have in its accounts at one time that could potentially be embezzled, fraud, wire transfer issue, anything like that. Crime and fidelity is going to kick in to help protect the association funds. So once, maybe twice a year, we'll ask for the financials from Smokey or the board, and that's the reason why. Directors and officers helps protect the directors, as well as a management company and management employees. Should a lawsuit arise, maybe they did something out of an error or an omission, something like that. Directors and officers is always going to help work through those issues. And then workers' compensation, which is the no employee policy. So it's a couple $100 a year, and it provides the association with a decent amount of workers' compensation insurance should a board member or volunteer of the association be injured while performing work on behalf of the association. And it also has some stated limits which could avoid a potential lawsuit in the future if anyone were to get injured while working on behalf of the association. So in a nutshell, those are the policies that the association has. I'm going to pause for just a second. Does anyone have questions about these policies? All right. If you do, just go ahead and put them in the chat and I'll get to them in just one second. Of these policies, the most coverage, the broadest coverage and the most expensive is going to be the property insurance. This is going to provide coverage in line with the governing documents, so common areas, exterior of buildings, and then where it goes to walls in or walls out varies per association. But very important that you pay attention to that because you do have, as an owner, you have two coverages, your individual and then also what the association covers. And we try to make sure that there's not any overlap so that no one's over or underinsured. The common area property insurance is going to restore the unit to its original condition. So if you are an original owner, however it was that when the property was originally constructed, so that type of flooring, that type of countertop, cabinets, that's what the insurance company would restore it to. It's your personal policies that would be responsible for covering any improvements and betterments. So if you took out carpet or linoleum flooring and you replace it with wood flooring, the upgrade between the carpet and the wood flooring would need to be covered under improvements and betterments on your personal policy. Along with your personal property, you also want to make sure you have all your personal property covered on your individual policy. That's never going to be covered by the association. The association has two different deductibles on their property policy. The first one's $25,000, which is what we call an AOP, all other perils deductible, usually going to come into play if there's a fire or maybe a car drives into a building. Wind and hail is usually going to be in your area, tornadoes or any type of straight winds that come through at a high speed and cause damage to the building. The 3% deductible is of the total insured value. So when I talk about assessment coverage here in a minute, I'm going to dive just a little bit deeper into that. So that 3% of the total insured value comes out to be just a little over $500,000. So if there's a $500,000 deductible, we obviously don't expect the association to pay out of reserves for that. So what we would suggest is doing what's called a loss assessment, which would then be divided amongst all of the owners. And hopefully the owners have the right insurance in place where they wouldn't have to pay that out of their pocket, but they could take that loss assessment letter from the association and turn it into their personal carriers to provide coverage. Now, that does not apply if it's like a human error. That has to be an association deductible that is applied to all owners evenly in order for your personal coverage to kick in. And each policy will vary. So one of the things that I encourage you to look at on your personal policy is what's called loss assessment coverage. It's usually going to be listed under the dwelling coverage. And if you don't see that listed, you definitely want to ask your personal agent about that. And you kind of look at your percentage of ownership to determine how much you want to carry on that. 10,000 is usually the standard limit that personal carriers issue in Texas. If you own a larger unit and your percentage of ownership is greater, then maybe you want to take out a little bit more. Maybe you want to do 20,000. The insurance is very inexpensive. We're talking less than a couple $100 a year to have enough coverage to cover that 3% special assessment if that applies. So it's really good sleep at night coverage. The other thing that I have listed right here, so it says, what should unit owners buy to supplement master policies? So the first thing we went over was special assessment coverage. The second thing I'm going to tell you about is ALE, alternative living expense, or maybe loss of use expense. If there is a really bad incident that takes place, let's say maybe it's a fire that affects, I don't know, 8 buildings. It's going to take a little while for those buildings to be mitigated and then repaired. So that time while those repairs are being made, that's what we would call loss of use or alternative living expense. And that's a coverage that would pay for your family to live somewhere else while those repairs are going on. Loss assessment coverage is another one that's usually less than like $100, $150 a year. And in terms of how much loss assessment coverage should you carry, that's really a personal decision. I've seen a building of, a building of several homeowners this is a high rise that I'm talking about. Several owners had to evacuate while repairs were being made. Some of them got a hotel. Some of them got a 2-bedroom, 2-bath apartment because they lived in a 2-bedroom, 2-bath condo. So depending on the size of your home, that's what you would want to look at. Would you want to go to a hotel? Would you want to go to an apartment? And then how long might you be displaced? I always say 60 days, 60 to 90 days. So however much it would cost for you to live in a place similar to where you live now for 60 or 90 days, that's a good amount of loss assessment coverage to carry. And you can also ask your personal agents about that. They can provide a little bit more in depth. We mentioned earlier, personal contents should always be covered on personal policy. Just make sure you're including firearms, jewelry, if you have any fine art, anything that is of a high value. It's always good to make sure that that's specified, or there's a serial number associated with the item on your personal policy. I like to take pictures or do a quick video around your house that you can share with your agent so they have an idea of what it looked like prior to the loss. These are just things that you do as as best practice. Let's see. Okay, so a couple other coverages that you want to look for within your policy. Slow water leaks. A lot of times, these leaks that we see in a shared wall might happen behind the wall, and so you don't see it right away. So just make sure that you don't have any exclusions in your policy for slow leaks. That's something that we always look for. So if you only have the declaration pages of your insurance policy, which is like the first 5 to 10 pages, you're probably not going to see any exclusions. I recommend asking your personal agent for a full copy of the policy, so that way you can go to the back and read the exclusions and make sure that none of these apply to your personal policy. If they do apply, I recommend just asking your agent or broker if they can add those coverages back in. Sometimes there is an additional premium for that. Sometimes there's not. So it just depends on your carrier and then the limits that you're asking them to add back in. Renter's policy. If you rent out your home, you should have a renter's policy for the person who lives there, and you should still have a owner's policy as well. I'm not going to spend too much time on this, but if you are an owner or an investor that rents out your condo and you have questions on this, or you want me to take a look to make sure that both you and your renter are properly insured, my contact information is at the bottom. You can reach out to me directly. If you live on the ground floor and you have a storage unit, everyone's on the ground floor, I guess. So if you have a storage unit, or whether it's at the property or located somewhere else, if you want the items within your storage unit to be covered, you need to make sure that that's spelled out on your personal policy as well. Because again, personal contents are never going to be covered by the association. If there's an issue and a claim needs to be filed, all claims are filed with us through the board of directors or the property manager. Homeowners can't call us directly to file a claim. So we ask that you contact Smokey and make sure you just document everything. Keep all, pictures. If there's a piece of equipment that failed, keep that until the adjuster comes out. And then, we'll be in touch if there's a loss, but hopefully there won't be any losses. If you need a certificate of insurance, there's an email address right here. You can request this from our certificate team. They usually respond within 1 business day. If it's from your lender and you need a mortgage number, clause, anything like that specific, just specify what that is, or forward us the email that you actually received from your lender. That way our team can customize it exactly how they want to see it, and then they'll actually respond directly to them with you on copy so that you know it's done. If you have a lender, once you utilize the COI process, then every year we automatically send it to your mortgagee. So it's a nice little service that saves you one little step throughout the year. That's kind of a quick overview of what we suggest owners have and also what the association currently carries. So I'm going to pause for questions. And also, you feel free to just take yourself off mute and ask questions, or you can type them in the chat.
Hey Chelsea, did you? I think I already heard you, but I just want to make sure you went over recommendations for the owners to have the proper coverage for deductibles, like for the.
Yep. So I'll talk a little bit more about that. That's fine. So where was I? Right here. So if you can see my screen, there's two different deductibles, 25,000 for all other perils, and then 3% for the total insured value if there's a wind and hail event specifically. So the 25,000 right here, this would typically be paid out of your dwelling coverage. So if you're looking at your personal policy, the first line usually says dwelling coverage. You want to make sure that you have absolutely no less than 25,000. And then you would really need to talk to your personal agent about that because that's when the improvements and betterments come in. If if you want to increase that, we see them all the way in the millions, depending on the value of the inside of your home. And then wind and hail is going to be that special assessment coverage that I referred to. So 10,000 would be the minimum limit that I would that I see on policies, and then depending on your percentage of ownership. So if we see them 10,000, 15,000, 20,000, just talk to your agent about that, and whatever you're comfortable with in terms of wind and hail coverage is what you would carry. And the reason Smokey wanted me to mention that is because if a loss originates in your unit, whether it's negligence or an accident, this deductible of $25,000 could potentially be billed back to you. So if the association has to make repairs, the first 25,000 is the deductible. So that's going to be the association's responsibility to take care of. If the loss originated in your unit, Texas Uniform Condominium Act does state that the unit partially or wholly at fault could be billed back the deductible. Again, our goal is not for you to pay $25,000 out of pocket. It's for you to have the correct insurance in place so that if a loss originates in your unit and if the board charges you back this deductible, then you're properly insured to make the association whole in terms of your deductible responsibility. And then right here, it says all deductibles listed are per occurrence, not per unit. So that is one thing that we negotiated, is making sure that it's a per occurrence deductible, regardless of how many owners are affected.
Chelsea, just one clarification. In our governing documents, we don't have to file on our insurance claim unless it's at least the deductible, and
Correct.
it would go back to the responsible party. So
yeah, I can touch on that as well. So
Okay.
if you're talking about if the damage does not meet the deductible, correct?
Correct.
Yep. So if the damage doesn't meet the deductible, Texas Uniform Condominium Act, and apparently your governing documents as well, state that it's pretty much every man for himself. So let's say that a loss or a fire originate in your unit and it's pretty bad, but the damage is only $10,000. In that situation, your personal carrier would be wholly responsible because the damage does not exceed the all other perils deductible, which is what would apply in the event of a water or fire loss. So in that event, yes, each owner would be responsible for repairing their unit. If the damage caused within your unit affects another owner, you could potentially be held liable by that owner. This would be a neighbor to neighbor issue as long as the damage is underneath the deductible, so association wouldn't have a role in it. But the other owner could then come and subrogate back against you, or could just send you a demand letter and potentially pursue it civilly if you didn't take care of something that you are to be at fault for. So the biggest take home here is that you could be responsible for the $25,000 deductible. So make sure that you have that coverage. Ask your agent, hey, if I get charged back my deductible of $25,000, am I properly covered? And that's going to be so the type of coverage that would pay for that is your general liability. Most homeowners policies are a small package. So you usually have your property insurance and your general liability packaged in there. Condominium owners oftentimes might have to bump it up. Maybe your insurance carrier only gave you $5,000 or $10,000. Then you're going to want to bump it up and make sure it's at least $25,000 in general liability. Most condo owners that I see carry $500,000 or $1 million. And then of course, only you know your personal net worth. So if there's a reason that someone might sue you, that's the same coverage. So, on your own, you can talk to your agent and decide what limit you want to carry. But general liability is what would pay to reimburse the association should a deductible be charged back to you. I know this is a lot of information to take in, especially if you haven't dealt with like multiple unit claims before. So if you have questions, like I said, please feel free to ask because someone else might have the same question as you. If you're not comfortable asking, then feel free to just call me directly or send me an email. Anything else that I
Chelsea,
need to go
I was
over?
wondering if, oh, sorry, I had one more question real quick. And so let's say there's a hail damage, 2/3% loss, and the association has to special assess for the deductible to even get it covered. Is there a type of coverage that you can get that protects the owners from that?
Yeah, so that's that special assessment coverage that I did talk about that just a little bit earlier. The special assessment coverage is what you want to make sure that you have in place in the event that the wind and hail deductible. So like Smokey said, there's a really bad event that comes through. It causes a significant amount of wind or hail damage. It exceeds the deductible of 3%. Then the association has that massive deductible of $500,000. They would do a special assessment to all of the owners. The owners would take that letter that they received from the association, turn it into their insurance carriers, and their special assessment coverage would pay their portion.
And is there a, I know this coverage is reasonably very inexpensive. We were just
Yes.
talking with another board about this last night. Some of the people are saying they have like $50,000 coverage in it. So
Yep.
I don't know. Is there any standard or recommend?
So the loss assessment coverage is really going to depend on your percentage of ownership. 10,000 is the standard amount that you see issued on the majority of the personal lines carriers. The deductible, I don't know right offhand without looking how many condos you have in your association, and I don't know if your assessments are percentage or equal parts.
They're equal parts and they're 63.
63. Okay, so here, let me do the math real quick. Over here. So let's see, that would be 529,410. So what I'm doing is I'm taking 3% of the total insured value, which is 17.6 million. And I'm doing times, oh wait, no, divided by 63. So yep, it would be just under $10,000. So $8,400 is what I'm calculating. Could potentially be each owner's responsibility. So if you have that $10,000 in coverage, which most personal carriers are issuing, then you should be good to go. If you have a larger unit or more than one unit or anything like that, I'm only referring to 63 divided, or the deductible divided by 63. So just under 8,500. So look at your policy, look at special assessment coverage, look at what your amount is. If it's not 10,000, I would say get it to 10,000. If it's more than that, you don't necessarily have to reduce it. But if it, like, let's say it's 50,000, you're being charged an extra premium, then you might want to consider reducing it because in that event, you're kind of overpaying. But yeah, that would be the maximum amount that an owner could be charged back based on an insurance claim.
Yeah, I just increased mine to 25 and it was $8 a year.
Yeah, it's very inexpensive. So, with that being said, if anyone is looking over their insurance policy and they have questions or if something on there doesn't make sense, again, feel free to reach out. I'm happy to take a look at your personal policy and make recommendations. I don't sell personal insurance. I just want to make sure that the owners are all properly insured.
Thank you for that explanation, Chelsea.
Yeah, absolutely. And Mark, did that answer your question as well?
Yeah.
Okay, perfect. All right, well, my information is on the bottom of the handout. Smokey's gonna send that out tomorrow. If y'all have any questions, feel free to reach out. Always happy to help.
Chelsea, thanks so much for doing this.
Sent that out.
Yep,
It's a great
absolutely.
benefit.
Anytime.
Thank you, Chelsea.
Y'all have a good night.
Yep. Hey,
Hey,
anybody on the
Chelsea,
call that
yeah.
hasn't filled out the survey, if you would do that, we'd appreciate it a lot. So thank you.
And I just, if anybody noticed, I already mailed out that FAQ to everybody.
Thank you.
Thanks, Smokey.
No problem.